Founded in 1986, London & Capital is a well-established asset management firm based in New York and London that currently manages around $3 billion in assets. That in itself is not unusual. But what is unusual is that they have a division in their company that only specializes in insurance assets. We asked William Dalziel, a partner with London & Capital, about the key issue when it comes to managing the assets of insurance companies.
And it seemed to me a key issue with asset management when it comes to managing assets for insurance companies is understanding that insurance companies have a limited capacity to absorb downside. With most clients, downside is a fact of life and you have to accept it and you can live through it. The problem with an insurance company is you can, there comes a point below which you cannot accept any further downside. If the market turns against you, you could easily find yourself without sufficient capital and be locked out of the game and the regulator shut you down. At that point, it's not much comfort to know that those assets will increase in value at some point in the future, because at that stage you're finished as far as the insurance business is concerned. So we came at this from a capital preservation focus, which is the way that we manage assets, and on a risk budget basis. So we will manage a portfolio based not on what products we can provide you, but what information, what intelligence, and what value added we can bring to the insurance company. Our view is that we are effectively the outsourced in-house asset manager for the insurance company. Our job is to equip the board to make adequate and complete decisions based on the investment portfolio, and then to execute those decisions on behalf of the board. Now, what makes managing money for insurance companies different from other companies or other clients is that in the first place, most insurance companies are not in the business of making money for its own sake. They have to manage money as a corollary to the providing risk coverage. And so the asset management function comes as an aside. However, an important aside, because it's the only other way that you can contribute to the capital of the firm. It's the only other source of income for the insurance company. So we have to be very wary of risk. We have to be able to accept a modest amount of return, but for most insurance companies, even a modest amount of return is very worthwhile because of the leverage effect that the capitalization of the premiums bring to the business.